Today is December 7th, 2025. It is 11:31 a.m. Pacific time as I am recording the video. And Bitcoin is at the biggest key pivotal inflection point in all of 2025. Bitcoin has returned to the exact level where bull markets are either reborn or executed. And this is Bitcoin colliding with a multi-year trend line and a global liquidity regime that's about to choose who ultimately perishes and thrives. Taking away the lines, and I see a clean head and shoulder classic looking top forming under the guise of a bear flag continuation pattern. In fact, this level is so massive that it's had undeniable major reactionary lows and highs across this entire span of time. And honing in onto that key inflection point, you have massive golden pocket fib resistance called the 93,402 handle, and that level has been respected heavily amongst short sellers and or levered long traders. Multiple times you had an additional bounce, weak bounce off that trend line only to be faked out, and a piercing ascending uptrend price support level in confluence of its golden fib pocket resistance level. This is a massive key inflection point here with a descending price resistance level coming into attack here. You have just a wall of resistance up above here. Short sellers will be waiting patiently for a solidified red breakdown sell signal on a daily candle close below its 786 fib resistance level and descending bear flag. Call it the 84,903 handle, and that will be the most telling point in which short sellers will begin to pack on these shorts to hone in on the targeted 74,000 level and ultimately a perfectly measured flagpole down to the 68,850 handle. And that level coincides with a big major weekly time frame support level that will be more than likely defended by long traders and bull traders really at all costs to avert further technical damage in between some of the momentum indicators spanned across the weekly time frame. That level will be more than coincided with short covering and additional bounce, especially if you get a huge move with extreme velocity down to that level. I would only expect a ton of bids to show up and a full-blown defense. And this is what happens when liquidity begins to run dry. Sovereign debt cracks widen and institutions begin raising cash for some of the year-end balance sheets. And this entire rejection structure is what happens when the macro flips from full-blown YOLO risk on to every dollar must defend itself.